Good Tuesday evening. It is Dave at PreciseAlgorithmTrading.com. It's Tuesday, May 23rd, 2023. And I'm going to start with our automatic trading system tonight because on a day like today in the markets, I'm happy to have automatic trading systems. So I also trade stuff by hand, and I also do some investing, which I think everybody has to do all that. I got multiple systems going, and we advocate that at Precise Algorithm Trading. It's smart to have money in different buckets. That's anyways. So this is one bucket, and it's one way to invest your money. And anyways, on a day like today when the market was rough, and we'll get into that. I actually don't even know what all the results were. I just saw what some of it was doing while it was unfolding during the day. Something I talk about on the website is, I don't love or need to be in front of the markets all the time. In fact, I think it's healthy not to be. This is a way that you can actually, an algorithmic automatic trading system literally can trade for you during the day, and so it's in front of the markets all the time. It takes signals, and in the other stuff that I do, I can walk away and I don't have to hang on every tick of what's going on in the markets. So anyways, I'll get into this. This is the Dow futures contract, and we got a new equity peak today. That's a green dot right there, which is pretty cool. We had a big, obviously, uh, losing trade after that, but and again, this is the results. What I'm showing here is the results of our trades, not the actual not what the charts are doing or anything else. It's when that happened right there. That was a few winning trades. When that happened right there, that was mostly a few losing trades. So today, having a new equity peak and having this uh, zigzagging back and forth up has been more winning than losing. And then right there, sometime toward the end of the day, we had a losing trade. So the fact that we have new equity peaks means that the green dot on the right hand side exceeded the one on the left hand side, and then you look at it like this on a 6-month basis, and obviously I think it's when you have green dots and basically you're going from the lower left to the upper right on an equity curve, that is what you're after. No matter what you're doing, investing, trading, or whatever you put your money in, you want your equity to go up from the lower left to the upper right. So this is the Russell futures. We trade 3 contracts or 3 different systems, multiple contracts, and it's so we have diversification amongst systems. You could trade one system, you could trade one contract to get started. And anyways, this is the Russell. So if you think about it, the Dow, that's your McDonald's and the Dow Jones Industrial type stocks. I think I don't even know what they all are, but I think Apple's in there. It's 30 stocks. They're picked for to represent the industrials of the market, and they switch every now and then, but they've been going on for over 100 years. And then you have the Russell, which is small cap stocks, so they're going to move differently than the big blue chip stocks, which is what the Dow is. So that's diversification. So win, lose, or draw. We've got multiple things going on here. This is what it looks like on a 6-month basis, and we had an equity peak back here, and then we had a new one recently. We had a little bit of a drawdown, and then we're back up a little bit here, and we want this to take off and start making nice new highs. You can see this one doesn't trade near as much or as often as this one does. And that's actually, in my opinion, good because we pay commissions every time we trade too. So the fewer times you trade, the fewer commissions you're going to pay. This is the NASDAQ, and it's tech stocks, and I can't remember how many stocks are in the NASDAQ these days. Let's call it thousands, a couple thousand anyway. And it was really doing great through this whole period right here, and then it had a nice drawdown there that hopefully, I mean, it's like kind of like this drawdown right here. Um, if we're in the throes of, you know, they never look the same, but they do echo. So maybe we're in the throes of something like this. Maybe we have a little further to have to fall. Um, and mathematically, by the way, typically these pullbacks are about, I mean, that should be the deepest one. And when I open these up on weekends, I show a year's worth of data. This is getting to be, and the point here is that this is getting to be the like the deepest one. So I won't say it's there yet. It'd be really nice if it just took off and went higher again, but this is all based on math, and it's all based on, you can't trick this. Um, I'd like to explain that better, but I'm not sure I can. It's like, A plus B equals C, and every now and then, like, those things get jumbled around, but um, ultimately, at the end of the day, A plus B equals C. So 1 plus 2 equals 3. You can't change that. And this thing's got that type of thing all over it. Every now and then you get out of whack because of it's really boils down to emotion in the markets. And then, but we also trade both directions. This thing, you have winners and losers that where you bet on the market to go down, and you also bet on the market to go up. And at the end of the day, it's we build equity curves that go from the lower left to the upper right, and that's what they're intended to do. Every now and then they do go quiet. I mean, this was a quiet period that lasted a couple weeks. So that's what I got there. Let's flip over to the actual markets. So this is what I'm saying. The S&P had a really rough day. I mean, let's go to the SPX. It's down 1.12% today. After it's had this rally and breakout here. Um, it broke out above the triangle pattern and it's pulled back hard to it now. We'll see what happens. But we also have a squeeze going on the weekly chart. If you look here on the weekly at the bottom in this that mid-range, I guess I didn't really name it very well. EMA by EMA 8 by EMA 21. Does it look like it's done? Well, I mean, we had all that red that came down there, and now we've turned green. Could it roll back over again? Sure, it can. But look back here. We had green, 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 green. I mean, it's when I zoom back over the course of this thing, this thing could go for a while. Not saying it will because this is an extended move on the right hand side, but we're also in a squeeze, so and we have target dots to the upside. This is the type of action that makes traders want to quit. And when you have action that makes traders want to quit, after a breakout, you typically get a pullback. Once you get a pullback and the traders want to quit, you typically start going back up to the other side. That's just the way the markets move. So let's flip. I'm going to go quicker now. Here's the Russell. Well, it's going to go quicker, but I didn't kill all my background charts here. I've got a lot of stuff in the background that weighs this down. We have had a Russell breakout to the upside on the daily. As long as that lasts on the daily, it can turn into a weekly. If this thing fails on the daily, I'd expect it to stay down on the weekly. Here's the Dow. It's been down. It started to have some positive momentum. We are still bearish at this point, or we flip back to bearish. We're red, but we're green on the weekly. So, except we got a down momentum arrow on the weekly as well. So, we're going to be fighting right now until this thing gets up and going one direction or the other. We do get enough signals though to be able to tell. I mean, I got probably a couple great examples. Here's Amazon. I mean, Amazon was up, 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 up. And when you're up in these, and you're up nicely in a position, if you're afraid of the markets, or you've got enough profit, take it off the table. I have a habit of holding on to a trade until it actually gives up all the signals to go back the other direction, and I should take more profits more often. And that's one of my things I'm working on for my trading plan. All right, then the Nasdaq. By the way, that's something an algorithmic trading system doesn't do. An automatic trading system, I should say. You don't just take it off the table because you're profitable. You literally build it off of every trade that you can get. This thing is slow. But when you're doing it by hand, you have the ability to take profits, at waves, especially when you're looking at a daily chart, and the daily charts move a lot slower than the intraday charts. So here I also want to call out the Nasdaq. I put this target on way back here a couple months ago at this point, I think, and we're not there yet, but we're almost there. My money is on that we're going to get there. It's just a matter of, do we pull back to these moving averages at some point here and then get there? Yeah, that's really possible. The moving averages constantly are moving to the price, and the price is constantly moving to the moving averages, except for when they're moving away from each other. And I know that's a weird thing to say, but they're if one gets away, then they're going to start catching back up again, because that's just reverting to the mean or the average. All right, the transports pulled back today. Oil actually bounced up today. I don't think there's anything to write home about. And looks like it's mentioned transports. So, and bonds bounced a little bit, but they are bearish today, or over the last. I went ahead and placed stops for my long positions, because once I got the down arrow on or TLT here, it's like, well, there's no harm in, to me, is putting it at the bottom of the candle, and if it never gets there and it reverses, then I'm still in the position. It's just as easy or just as good to get out for what it's worth. But these, like Thinkorswim, has ways to be able to place trades that if it hits a price, then you can kill the position. All right, I did that, and then let's flip over to stockcharts.com and let's look at what's going on under the hood. For what it's worth, the Nasdaq threw a really major signal yesterday, and then we got a pullback. That is common. After you get a pretty bullish signal on the Nasdaq, which let's just go start there so I'm not talking about one thing and showing another. The Nasdaq pulled up into a column of X's yesterday, and now the markets have pulled back today. That's not uncommon. And in the meantime, the Nasdaq bullish percent index went up by 1.38% today. So there is bullishness under the hood. Here's the NYA. It went up by 0.28%. The transports probably didn't move. That's the case. The SPX went down by 1.84% today, and the NDX went down by 5.8% today. So that's significant, while the regular Nasdaq was moving higher. So you got to ask yourself, if the Nasdaq's got a couple thousand stocks in it and it moved higher, and the NDX, which is the Nasdaq 100, went minus 5.8% lower, then really the biggest stocks in the NDX or in the Nasdaq were the ones moving lower. That made an opportunity for more stocks that are smaller to gain. I hope you got that, because that's kind of important. It's a little hard to wrap your head around. And then the OEX is the last one here, and it went down by 5.45% today. And it's really not, it's totally in character here. It's on a column of O's. It's been on a column of O's, and we went down farther today. One of these days, this thing's going to bounce, and when it does, it's going to rip off the bears' faces. So, just like the bulls have been beat up for a little while now. So, what I like to do is try to stay a little bit in both. Mostly bullish, though, because markets, especially the stock markets, tend to eventually rally, and they're more bullish than they are bearish overall. That's what I got for you guys today. Hope you enjoyed it. Take care. Good night and great trading. Take care.